Today, we are going to get inside the minds of some of the world's sharpest long-term investors. We're going to look at 3 really powerful ways of thinking and see how what starts as a rigid, kind of scientific approach to investing can actually become a real art form. Let's jump right in.
So, let's start with the big question. Is investing a science or is it an art? This is something that even the most experienced pros argue about. Do you just follow the hard data, the formulas, or is it all about intuition, that gut feeling? That's the tension we're going to explore today.
And here's a pretty bold take from Francois Rochon, an incredible investor we'll be talking a lot about. He's basically saying that the real magic, the genius, isn't found in some complex spreadsheet. Nope, it's in the mind of the investor. That's where the art really comes alive.
But to really understand the art, you've got to first get a handle on the science that it's all built on. So let's rewind a bit, go back to the beginning, to this game-changing idea called value investing.
So where does our story start? Well, it begins right here at Columbia Business School. This is basically the birthplace of a whole new way of thinking about investing, a philosophy that would go on to shape some of the most legendary investors we've ever seen.
Okay, so picture this. It's 1971. A young, totally unknown broker, Charles Brands, is just sitting at his desk. And in walks this older guy, a living legend, Benjamin Graham, the literal father of value investing. That one chance meeting completely changed Brandis's life. It lit a fire under him, and he went on to build his own massive investment firm, all based on Graham's principles. Wild, right?
So what is this value investing thing anyway? Well, at its core, it's actually pretty simple. You figure out what a business is really worth, its intrinsic value, and then you try to buy it for way less than that. That gap, that difference between the real value and the price you pay, that's your margin of safety. Think of it like a built-in cushion that protects you if things go wrong. It's really the cornerstone of this whole scientific approach.
But the story definitely doesn't stop with Graham's scientific rules. Not at all. Now let's see how a new generation of investors, guys like Francois Rochon, took these core ideas and turned them into something else entirely, a true art form.
Francois Rochon. He's not rummaging through the bargain bin looking for cheap stocks. No way. Think of him more like an art collector, searching for investment masterpieces. This quote, which is actually from Oscar Wilde, just perfectly captures his whole vibe. He only wants the absolute best. And this slide right here, it perfectly shows that evolution. You see, Graham's classic approach was almost like a simple math problem. What's the price versus the value? But Rochon's approach, well, that's more like a complex painting. He's looking at the quality of the business, who's running it, its potential for future growth. It's just a much more nuanced and, artistic way of looking at things. Rochon completely redefines that old idea of margin of safety. He's saying it's not just about getting a cheap price. Real safety comes from investing in a business that's built like a fortress, with a brilliant general in charge. That's where the true security is.
So how does he actually do it? Well, his process is this beautiful mix of science and art. He starts with the science, right? Diving deep into the numbers, analyzing years and years of data. But then he switches gears to the art. He's evaluating the business itself, its competitive edge, the people running the show. And only after all that does he circle back to that final, crucial step. Is the price right?
Okay, that's enough theory. Let's see how this investment artist actually puts his brush to the canvas. It's time to take a peek inside Rochon's actual portfolio.
And we're not talking about some small boutique gallery here. Rochon's firm, Giverny Capital, is managing over $3 billion. That is a ton of money, and it really shows you the level of conviction behind this whole artistic approach to investing. And look at this. He doesn't just sprinkle his money around hoping something works out. More than half of his entire portfolio is packed into just 10 companies. This isn't about diversification. It's about concentration. He finds what he believes are true masterpieces, and he makes big, high-conviction bets on them.
And right here, this is where you can see the artist at work. He's always curating his collection. You can see him trimming some of his big winners like Meta and Alphabet, and then adding to other great companies. He's not just a passive owner. He's an active, engaged artist, constantly refining his portfolio masterpiece.
And get this, it's not just Rochon. There are actually 2 Giverny firms, and they're both built on these exact same ideas. Here we're seeing David Poppy from the other Giverny talking about the same thing, the power of founder-led companies. The idea is, when the people running the business have their own money on the line, you're all in it together. Or as Roshan puts it, we're in the same vehicle as them.
But what happens when the artist leaves the studio? This is the big risk when you focus so much on management. Constellation Software was a company Roshan considered a total masterpiece, but its stock dropped 18% when its legendary CEO had to step down. It's just a tough reminder of how much value can be tied to one brilliant person.
So after all that, what can we learn? What are the big takeaways from the science of Graham and the art of Roshan? Let's try and break it all down.
Okay, this might be the single most important lesson of all. It's about your time horizon. If you're obsessing over quarterly earnings reports, you're just getting lost in the short-term noise. Start thinking in years, and you'll see the bigger patterns. But if you can really train yourself to think in decades, that's when you witness the truly incredible, mind-blowing power of long-term compounding.
So to sum it all up, patience really is a superpower. The quality of the people in charge matters, maybe more than anything. Your goal is to own great companies, not just cheap stocks. Thinking decades, not quarters. See those wild market swings not as a threat, but as an opportunity. And above all, it comes down to humility, rationality, and patience. That's the secret sauce.
And all this leads us to one final, really important question for the world we live in now. As AI and algorithms get better and better at the science of investing, is the ultimate edge, the thing that really makes a difference, going to be the art? Is the future of investing not in lines of code, but in that uniquely human ability to use judgment, to have a feel for things, and to see the masterpiece that everyone else misses? Something to think about. Thanks for tuning in.